Hello, everybody. I'm Cantonese Cat. Hey, everybody. Cantonese Cat here. I want to go through a few things here. First of all, I want to go through my top 10 positions, how they came to be. I'm going to speed through them just to kind of give an idea that these are not positions that just became my top 10. I accumulated and then they grew over the years to become the way that they are. I have suffered through a lot of unrealized loss. I have not timed these things perfectly. I don't really care to. I just kind of want to show you the process and the methods of my madness, if you will. And to kind of show you my brokerage account in terms of when I buy, when I sold, and whatnot. These other posts that I really posted all over on X about a week and a half ago. So feel free to check those posts out if you would like. For example, I did not intend Palantir to be such a big position of mine. It just kind of became that way. I accumulated Palantir for many years, and over time, it just did really well, and it just took over. I haven't really seen any reason, particularly to want to sell it. I did end up selling probably roughly about 6.5, 7% of my position. I did reposition my Palantir to other things, but the majority of the shares I have, I still have. Whereas the top 10 also include things like SoFi, Tesla, Coinbase, Robinhood, CleanSpark, Shopify, Iron. I'm going to go through a lot of these things. So first of all, this is the graph that I got from my brokerage. This is my biggest stock portfolio in the distribution, and this is the graph that I got from my brokerage from Merrill. I cannot make this data up. These are all buy and sell data that I have. At the beginning, until around 2020, 2021, I did not know what the heck I was doing. I basically was just trading in and out. I sold, I bought, I sold, I bought. I did not really do much technical analysis at that time. I was hearing about this company called Palantir, and I was very excited about the company Palantir. I was thinking I was smart because whenever price went up all the way to 45, I did not buy, and then as it came down, I bought the dip, and I kept buying the dip, kept buying the dip. Next thing you know, it just plummeted down on me. As it plummeted down, I was scared, and I started picking up technical analysis. Really started around 2022, somewhere around here. And when I was doing that, I was thinking, hey, actually it started to have a little bit of base formation, so it gave me a lot more confidence to just kind of buy. So I bought pretty heavily during this dip here from 2022 all the way to 2023, 2024. I really stopped buying whenever price gets up to around like the mid 20s. That was really my last buys, and then whenever it started taking off, I just didn't really buy any until it got down here. I kind of bought a little tiny position here for $100 just to kind of prove a point. I think Palantir is going to go up a lot higher. And sure enough, when I bought there, it ended up plummeting down to 60. But eventually, it ended up going back up here. And I did end up selling about 6.5, 7% of my positions to kind of rebalance to other things. But currently, it's been doing extremely well. I don't really want to show my monetary gains because I really don't think it's that important in terms of what I'm doing. I think it's more important to show the process than anything else. My cost average is extremely good. I'm very happy about my position here. Coinbase, I've been accumulating really since October 2024. I try to buy low. Whenever it goes down, I really try to accumulate here. Whenever it goes back up, I did not really buy any. Everybody was kind of getting a little bit euphoric, including myself. I didn't really buy, and then whenever it came back down, I bought the dips over here, and I continue to buy the dip. And that's kind of where I'm at right now. I'm up currently on my Coinbase position. Currently this price is a lot lower than what it was just a week and a half ago, but currently I'm still up pretty decent size here. My coin position Tesla. I also did not really time this perfectly, and this is just an illustration to show you don't really have to time that perfectly. In 2020, 2021, I was just kind of trading in and out, trying to buy low, and sell high. That's kind of what I did over here, and then eventually I kind of bought like a little tiny bit of position. I thought I was getting a good deal over here. And sure enough, it plummeted all the way down here. Bought a little bit of tiny position over here. I really started accumulating Tesla down here. And I really started doing technical analysis probably around 2020, like mid 2022, somewhere around there. And I bought very heavily over here. And I continue to kind of buy the dip. Whenever things get a little bit out of hand, I don't buy. Whenever it dips down, I try to buy a little bit. And then whenever it plummeted all the way back down to like the 140s, 150s, and below 200, I really was buying rather heavy here. Whenever it went up, I kept buying here. But whenever you have this peak over here, everybody was super euphoric. Everybody's buying like double leverage Tesla, TSLL, and all that stuff. I did not buy it. I was saying, hey, I was also bullish. It could break out from here, but I wasn't sure. So I did not buy because the risk was elevated. And whenever it started plummeting down, everybody was super scared. I didn't care. I was buying more of Tesla. I was trying to average up on my Tesla. And sure enough, I ended up having pretty decent cost bases, and the position so far is doing pretty well right now. So I'm just showing you that the process doesn't have to be perfect, but sometimes it is what it is. With Robinhood, I was very proud of this. When I saw Robinhood was about to really kind of take off, and I was looking at technical analysis, back in January 2024 on my old X account, I really started made a whole thread about Robinhood being a very, very good buy here, and I end up just kind of buying as much as I can. And sure enough, whenever I bought, I thought I bought enough. I probably didn't, but I ended up just having a position. Ended up doing pretty decent with over the years. I didn't really do anything with Robinhood. It just kind of took off. I could have bought the trough down here. I didn't. I was buying other things. So far, so good. It's my top 5 position just because I bought, less than 2 years ago, which is just absolutely amazing. Another one I've been buying, and I've been very verbal about buying, is SoFi. I bought this ever since it was really IPOE back over here, whenever it was a SPAC. For those who haven't really been around the market for that long, don't worry about it. It went by a different name. And then I bought just a little tiny bit position over here because I thought that it was a pretty good fintech company. It has a really good tech. It was Galileo. It was all these other factors that made me fundamentally very bullish on the company. And sure enough, the market tanked. And sure enough, SoFi tanked along with it. I avoided the temptation to buy this, and I started around 2022, and I bought all the way down from like the low teens all the way down. And plummeted all the way down to like $4 or $5 over here. I was buying, and then when it came back up, I was buying. Came back down here for about $5 here. I was buying. Banks were supposedly failing at that time. I didn't care. I just bought, and I just continued to buy the entire trough. And wherever it gets up to about $10, that's when I really stopped buying, and I just kind of let it go. And so far, it's been doing pretty well for me. And so far, I got a really good cost basis from it. It's a process, Shopify. It gets a little bit repetitive. All I'm going to say is that I was buying and I was accumulating wherever it's at the low. I have some buys that are down around like $25. I didn't care. I was crying at that time because I bought some around 50, and next thing you know, I was buying at 25. I wasn't feeling very good at that time, but ultimately it worked out very well. I got a very good cost basis from it. And I also even bought the dip down here a little bit, and so far I'm doing pretty well in that position. Cypher is also one that I'm also doing pretty well. I've been buying the dip over here, and also this big giant dip over here that was extremely scary because price went all the way down to maybe like $2, which is just absolutely ridiculous. And having a pretty decent cost basis right now is my top 10 position. Iron is another one that I'm actually quite proud of. I bought a pretty decent sized position over here, and through time I did not buy during these peaks over here. And where I start seeing it ticking off, I was seeing some Palantir behavior. I end up just buying pretty heavily over here. Well, not pretty heavily. I bought another like 30 something percent of my whole position here, and next thing you know, it just took off. And heck no, I'm not buying anymore because that's just not my style. CleanSpark, I've been talking about CleanSpark for a very long time. A lot of people think that I've wrecked people because I talk about a stock that, has gone down a lot. The reality is this. I didn't time this perfectly at all. I timed this quite horribly up here. I was trying to buy the bottom of the range because it was stuck in a range, right? When it's stuck in a range, it could either be reaccumulation or distribution. Turned out to be distribution. Turned out that I was wrong. But I still wanted to buy the trough because I was still thinking that the cycle's not over. I still thought that CleanSpark is going to be one of the better players if I buy the trough. And I bought the trough over here. I bought a little bit more down here, and next thing you know, I accumulated a big enough position. The cost basis is $10.51. I sold about 5% of my position and repositioned to other things. And I think I don't remember exactly what I bought, and I think the other thing and turned out okay. Next thing you know, I'm just going to keep holding. Like, there's no reason for me to really want to buy anymore at this point. If it drops back down, I might consider doing it. But so far, I think I like what I've accumulated so far. And then lastly, I do want to show this one to show you how vulnerable and how stupid I can be. This is Bitfarms. I've bought Bitfarms up in the sixes, up in the fours. I did end up selling the majority of my Bitfarms. I still end up keeping some Bitfarms during this big, basically a big price down, a falling knife. I lost about 5 figures from this. And I felt very, very depressed about the fact that I lost that money. And the reason why I want to show my gains here is because I just want to show you, like, this is, I did end up losing, quite a lot of money on here, but I end up getting them back. I guess is what I'm trying to show you. I did end up buying the trough down here, and I was really scared down here when it was less than, like $1, was like 50 cents or something like that. I was very scared. Didn't matter. Ended up buying the trough over here because I saw that it was making higher highs and higher lows, and I think the trend is really changing. So I ended up just buying heavy here. Peaked over here. Did not buy this peak. Came back down to the trough. Bought the trough. Came back down here. Bought the trough over here. And currently my cost basis is not that great. It's like $2. But I'm happy with the position that I have. I just want to show you that none of this stuff that I'm doing is timed perfectly at all. And I am just another, investor or trader, if you will. But just kind of want to transparent in terms of how I did. You don't have to do perfect to do well. I think the key lesson that I've learned is that if you see something that is at the beginning of a bull market, if it's forming more or less higher highs and higher lows, you're probably going to do okay if you just accumulate, or if you accumulate at a base that might turn out pretty decent for you if you end up staying with your principle and end up keep doing what you believe in doing. Not obviously, it doesn't always work that way. Obviously, you can keep buying something and the company can go down to zero and things can go bankrupt. I've also, invested in crypto in a company called Voyager and also lost a lot of money from that. And a lesson learned, right? Currently I'm not, that yield hungry at all anymore. I have, protected my assets the best I can. I've learned technical analysis to try to help guide me in terms of what I want to do. And with that said, I've identified currently 7 stocks that I'm buying right now. And I would go through a little bit in terms of the rationale of why I'm buying them. They are all different charts. They all have different technicals. And they all have different reasons as to why I want to get into them. This is RXRX, the ticker symbol RXRX. I've accumulated very, very slowly, probably over the last year or so, very, very slowly, because I just don't see this thing really kind of take off. This is, to me, a huge Wyckoff accumulation schematic that has lasted for years, number 1, 2, 3, and 4. We're into 4th year of Wyckoff accumulation. So whenever we get out of this, if this is truly Wyckoff accumulation rather than just breaking down and go a lot lower, if this is truly Wyckoff accumulation, which I think it is because the volume between trade over here in the spring and the test is extremely high, especially last week, then I think we have a pretty good opportunity once we're done with the shenanigans of testing and whatnot to go up higher, to show some sign of strength, which is what SOS is showing here, or stands for, and to consolidate over here and to go higher. That is what I see what RXRX could potentially do because of the volume, confirming that this could be a pretty decent spring. The idea of Wyckoff is basically, Wyckoff came up with this idea where there's like a composite man. Basically, the market is manipulated. It's the thought, and they're trying to accumulate the big money and the whales combined together. We call them the composite man. they can accumulate stocks behind the scene, and they can use different financial instruments that doesn't necessarily move to price. It's not always about supply and demand, and they can accumulate while setting up these schematics and get retail to be shaken out and not being interested. And when they distribute a lot higher, retail comes in, but that's usually a time when they end up distributing to folks. And that is called what I call distribution patterns, right? This is pretty classic as far as I'm concerned. I spotted the spring over here, and sure enough, it had a double dip spring, pushed up above. I think this peak over here is this test over there, and then I think it came back down and do another test. And then right now we got a little bit of the trees at the top. I don't think we're going to push through. I think we're probably going to come back down here to maybe around like 5.5, 5.4, somewhere around there, to tap that a little bit before maybe make another high to around $7 or $8 and then go higher sometime in 2026. I don't see this thing just tick it off. The reason why I like buying these kinds of things is because of two reasons. Number one is I think these kinds of charts give me enough time to accumulate. That is reason number one, because if I don't even have enough time to accumulate, it's kind of pointless to just buy a little bit if it's just going to take off. I would rather buy something that gives me more time, and I think RXIX is giving me time now to be able to do that. The second reason why I would buy is if it's looking like it's forming a really decent bottom, and it looks like it's the time that I spend on accumulating, and short term I can lose a lot of money. It doesn't really matter, 10, 20, 30%, doesn't really matter to me. As long as the formation is favorable, I still find it to be an attractive opportunity. So this, because it gives me time, because it looks like it's a pretty decent base formation, because it fits a very, very decent Wyckoff spring, Wyckoff accumulation pattern with big volume there here. I feel comfortable accumulating this. Now, is this thing going to end up just ticking off? No. The reason why I am saying that is because you look at the monthly chart here, it looks like it's probably going to take some more time. It's just pulling the Bollinger Band here because the 20-month moving average is negative sloping and just getting rejected here this month. So I think we have a little bit more time here. Now, with that said, Bollinger Band is squeezing here. It tells me maybe it's building up for a big move sometime, maybe in 2026, probably to reverse the trend. Once we're able to really truly reclaim the 20-month moving average from resistance here back into support with a huge Bollinger Band squeeze, it's going to end up being exploding with expansion on the way up sometime in 2026. Volume is also increasing here on the monthly too. You can see that. This is a okay setup to get into. Again, it's not a big position. If it becomes big, then I'll take it. This is kind of one of those things that I'm not planning on making this my top 20 position. If it decides to do that, if it decides to do it, so be it. But this is the setup that I'm looking at. The second setup that I'm really seeing here is Rivian. Well, before I go back, I'm going to go back over here too. I'm going to show you in terms of what I'm thinking target-wise. I think that if I do a Fibonacci level from here to the all-time low over here, you're going to see some Fib levels over here on the right here. Usually, I suspect that things are probably going to end up hitting somewhere around the 0.618 or 0.786 before it starts to see some really major challenges. So I think once this thing reverses, I think that we're going to end up seeing $17 and $25, which is a pretty decent, target that I'm thinking that it could hit over time. But obviously, nothing's ever guaranteed. That's just kind of what I'm thinking here. This is Rivian. Rivian is looking pretty decent. Rivian is looking pretty decent because it's got a symmetrical wedge that it broke out of on pretty decent volume over here. And throughout this range, once we broke out of it, when it goes up, we have increased volume. When it goes down, the volume is not that impressive. I think what we're really seeing here is continued accumulation of Rivian stock by the whales and by big money. And this really also looked like a pretty decent base formation here. I feel comfortable continuing just kind of adding onto it slowly and see where it takes me. The pattern here, and I do not claim that they have the same fundamentals because they're absolutely different companies, but the pattern over here, technically wise, it really does remind me of Robinhood. Robinhood formed a big base over here, and Robinhood really started to have a bullish engulfing candle over here. And this is when I really was like, man, I need to buy because this thing has engulfed like 4 candles over here, and this looks like it's ready to take off. Decided to give me a little bit more time to buy that dip right there, so I ended up taking advantage of that, and it just kind of took off, right? The entire time it's been kind of getting rejected here by the 0.236 log fib. And currently I'm seeing very similar pattern over here. Rivian's getting rejected here by 0.236 log fib here around $17, just being a very, very nice base over here. We don't quite have that crazy bullish engulfing candle right there. But it's looking like it's building something great here potentially, right? I mean, the volume is looking pretty decent because you also look in the volume over here with Robinhood. Before it took off, you can see how whenever it's going down, the volume is not that great. Whenever it starts to kind of tick up over here, this bullish engulfing candle, the volume is good, right? You've seen a very similar pattern over here. Whenever it starts to do a little bit of uptake, you have really decent volume. Wherever it's going down, the volume is just not as great, right? So I'm seeing some pretty similarities between the two here. I'm not claiming these two are the same. But I do wonder whether or not Rivian, it could be at the beginning stages of profitability based on fundamentals as well. It's a stock that I feel comfortable holding. Now going back to Rivian here real quick, if I just get rid of all of these things, if you're also looking at the Bollinger Band here on the monthly, you can see something that's pretty beautiful. It's basically flipping the 20-month moving average here from resistance into support. And the Bollinger Band is also squeezing. And currently, unlike RXRX, we have reclaimed the 20-month moving average from resistance here pretty clearly into support. With the Bollinger Band squeeze like that, telling us that a bigger move is to come, probably sometime in 2026. I feel good about adding to it because I also feel I have time to continue to build on this position. Again, I do not intend to just keep adding money to make it my top 20. I'm going to just accumulate and then see what it does. Give it time, right? But it's a pretty decent setup as far as I'm concerned. I do not guarantee you that it's going to end up going Robinhooding. There's no guarantee at all. And these are some very different fundamental companies over here. But I just like buying a base because if you're asking me where it could go, I think that the cycle, it could end sometimes at 0.618 or 0.786. Those are kind of my targets up here above. If things really tick off, I mean, obviously you're going to have some pretty strong resistance here as well. As you can see, that resistance, right? But I do think that with the cycle, with increasing liquidity, with the cycle going on into 2026, I think that it's possible to end the cycle maybe somewhere up here, which is why I'm optimistic about Rivian, which is why I'm buying into it. The third one is RCAT, Red Cat Holdings. These guys are doing drones. It's a very small cap stock. It is speculative. When it's speculative and small cap, it can fluctuate, and this is exactly what this stock does. It can fluctuate plus or minus 10% a day for no apparent reason. It's just very volatile. So if you're not into the volatility, if you cannot handle buying something and then the next thing you know it drops 20-30% on you the next week, don't buy any of these stocks that I'm mentioning. But if you're okay with holding volatility, if you feel comfortable about potentially losing money in the hopes of gaining money, and if you have discipline, and if you have more winners than losers, then you might enter something that's a little bit more small cap, like Red Cat, like RCAT over here. It's got a pretty decent Adam and Eve double bottom pattern. This is a very, very beautiful bottom. And with this bottom, as we get out of it, and we back tested that zone, for those people who cannot see what I'm seeing, which is kind of hard to not see, but you got a double bottom Adam and Eve, and then you break out and you back tested that zone. Breakout on huge volume, backtest on declining volume, and we bounce on increasing volume over here. This is a pretty decent setup for it to go higher. As far as I'm concerned, I think this is going to be a pretty decent stock moving forward. Bollinger Band is kind of expanding. That's the reason why it has a little bit of a harder time to go up, because it just simply hasn't expanded big enough yet. And if you also do a little bit of a fib sequence here from top to the bottom, we have kind of held the 0.76 over here. This crazy green candle over here pushed through the 0.77, 0.76, 0.86 just couldn't push into this high over here. A little bit of a false breakout, came back down, back test the Adam and Eve double bottom. This is when I start to accumulate. This is when I really started to accumulate. And I've been buying since very slowly, and I'm happy with keep on doing that because I'm not the only one who's buying if you look at the volume. If you're asking me in terms of what the target is for this thing, well, if you're looking at this as a Adam and Eve, let's say the Adam and Eve starts around $5, right? And the bottom over here close to basically zero. So we've already hit the target around $10. The reality is if you are looking at a breakout of this high, then you're talking about these higher double-digit numbers, and the cycle could potentially get as high as the 1.618, which is $100, which is a potential 10x from where price is at right now. Again, if you can handle volatility, because I cannot guarantee you this stock's not going to go down back to $8 next thing you know, in just a month or two. Like, it can do whatever the heck it wants to do. The trends are friend. I'm okay with continue to just accumulate, knowing that there is dangers to this stock. And right now I am in profits, so I'm going to keep adding because I still see some pretty decent technicals here. Now, I got a quantum stock here. A lot of people have probably been really bitter about this one here over the last couple of months. Yes, you should be. It's not been a fun ride for people who've been kind of holding from a few months ago. It's been going down a lot. Now, again, I'm just going to show you how volatile these stocks are. I like to look at things in log. If I turn off log, if you just look at this chart, it looks crazy, doesn't it? Like, look, what is this? It looks like a big giant pump and dump happening over and over and over again, right? If you don't look at it with log, you cannot really make any sense out of it. But if you look at linear, it's actually not that bad. Look at this high over here, look at it low over here, do a linear fit retracement. Where are we at right now? 0.5. Pretty reasonable area to find support here, right? If I change back to log, which is something that I do all the time, then you can see it's holding a 0.707, which is also a very logical area for it to hold. Can it plummet all the way down to 0.618, around $13.52? Yes, it can. Does it have to? No, it doesn't. As far as I'm concerned, this is also a very highly speculative stock. I don't want people to get into it blindly because there's no reason to get into a stock blindly. I'll tell you in terms of what technicals is that I see that makes me still feel interested in adding. Again, it's not a big position by any means. If it ends up going up, great. But a couple of things here. First of all, I can pull up the Ichimoku here, and you can see that it was resistance over here, and we broke through the Ichimoku cloud on huge volume. We back tested the bottom of the cloud, held that pretty decently, and we pushed back up above again on pretty decent volume. And right now, the Ichimoku cloud, which is as low as around $13, $14, somewhere around there, $13, I would say. That's pretty strong support there, right? You have all these different wicks up above. It has a hard time breaking above. There's still a lot of supply up here above. You could potentially come back and back test some lower areas down, which is fine. But as long as it's holding the monthly Ichimoku, I'm still going to be pretty decently bullish on it. And I don't mind being down 20-30% in the short term, if this pattern really plays out. Now look at the weekly, very similar things happening here. It is more or less, the week's not over, but it's more or less testing the kitchen over here. Could it come down to the cloud and test the top of the cloud over here around $14? Yes, it can. It did that right there, right? It already tested that. So overall, it's actually been forming higher high and higher low over here. So it actually doesn't look that bad. Just looking at this pattern, it's just a cup and handle pattern. This is a bullish pattern as far as I'm concerned. And I honestly don't have that much concern in terms of, technical damage or anything, even with this move, to the downside over here. Because if you're also looking back at the FIB levels, Well, if you do a lock flip, you can see it broken down underneath the 0.86. If you do a linear flip, you can see it's breaking down underneath the 0.618. Again, 0.5, $13.75 is possible, right? With that said, it is holding a lower time frame level fib pretty perfectly here on 0.5. So that could very well be it for the correction. We will see. Nobody can guarantee you that, right? That's why I don't just throw all my money into stock all at once. I take my time to try to accumulate. So in case there's some fluctuation, in case if I'm wrong, I will still be fine, right? Looking back on a very high time frame situation here, there are a lot of different Fibonacci levels you can draw. For example, you can draw from December 2020 all the way down to where price is, and we do the log scale logs over here. This is also another reason why I'm buying, is because it's broken above the 0.86 and it's just consolidating up at the 0.86 as support. It makes me feel okay with throwing some money in and see what it does, right? Especially when the breakout 0.86 is on pretty decent volume. If you're looking at a different way, if you don't look at this wick over here, you look at this wick over here, same thing, right? 0.86 is still holding that area. Well, I mean, if you look at this wick over here, then you say, okay, it's holding 0.76 over here. Pretty decent. It's trying to break about the 0.86. Regardless, it's holding higher fib levels. And this volume is something to pay attention to. So I am in it. And if it ends up plummeting down, then I lose a little bit of money. Well, not. But if it ends up going up from here, it could become a top 20 position. That's great. If I'm looking at the targets, the reason why there are a lot of different quantum plays, other plays I've actually taken off already. For example, you have QBTS, which I've already kind of taken off about this all-time high here, and is hitting the 1.272 over here, which QBT is not doing. Or if you look at IonQ, IonQ is also broken above and hit the 1.272 over here. So why am I in QBT? I would argue that it's okay to do the other ones. I think the other ones actually have more momentum going. I just end up sticking with this one because it's smaller cap, because the potential upsides is a lot higher if it's breaking above than the other ones. That's it. And it could be a completely falsified hypothesis. But it is what it is. I chose what I chose. I still think technically, when you look at this in isolation, it still looks pretty good. So I'm going to keep being in it. And that's fine by me. Now, the fifth one here that I end up buying here is a pretty common stock. A lot of retail investors and traders are getting into this. This is BMNR. This is Tom Lee's baby. Why am I getting into it? Well, I mean, it's really a couple very simple reasons. First of all, I don't know how meaningful this wick over here is from January 2023. If you use this wick and do a fib sequence over here, we've broken above the 0.86, which is great, right? If you don't use that in consideration, because I don't know how meaningful that is, if you use that wick down here, then you are in the process of trying to break above the 0.76, and it looks like it's a little bit of a ascending triangle trying to break above that area. So that's not a bad thing. You use this wick over here, then you try to break above the 0.707, and it's been trying 3 months over here, and having a little bit of a hard time doing it, but that's okay. Put out the Ichimoku cloud over here, and I'm gonna put this all the way back down. Actually use that wick again, and kind of illustrate my point here. The 0.86 is not just from this fit level. That's also the bottom of the Ichimoku cloud on the monthly. And we also broken inside the Ichimoku cloud. So this is something that I don't take lightly. If things are breaking inside the monthly Ichimoku cloud for good, usually that's a pretty decent chance of going to the top of the cloud given time. How much time? I don't know, right? But currently it's inside the cloud, so I find that to be a pretty decent development here for BMNR. The other thing is you also see that the monthly Bollinger Band here is expanding. And it looks like that's probably one thing that's really restricting price from going up a lot higher, because you just simply haven't had the full Bollinger Band expansion to allow price to go up higher. It just keeps on holding on top of the Bollinger Band here, which is just crazy. The low Bollinger Band is also expanding to the downside. So the momentum is there to the upside here on a higher time frame. It's no longer overextended like it was over here. It's touching the upper Bollinger Band, so that makes me feel comfortable to, kind of buy it where it is. Plus, I'm also bullish on Ethereum if you haven't listened to my other videos already. I'm okay buying this. Now, looking on the weekly here is a little bit convoluted. It's got the rising 20-week moving average here. You can still touch that in the upper 40s before going up higher as possible. It's also trying to huck the Ichimoku tank in the blue line here. Initially, it was like support, no, broke down, now it's resistance, just hucking the blue line over here. Trying to figure out what it wants to do. It's just consolidating sideways over here. I feel comfortable buying, knowing that it's inside the monthly Ichimoku call. I feel comfortable buying knowing that it's got a rising 20-week moving average. I feel comfortable buying because of all these different reasons below, right? Now, also another thing, if you want about targets, I also am getting a little bit greedy here. I think that if it's able to break out after it's done consolidating, now I don't care in terms of how high or low it gets. This thing can end up, I can end up losing like 20, 30, 40% short term is possible. But with that said, these are some potential targets I'm looking at for the cycle. If it ends up pushing things up above, even though I was showing you the Ichimoku cloud on the monthly, right? The top of the month, the Ichimoku cloud is 1.272. Right around $442, which is a potential target for the cycle. If it breaks the Ichimoku cloud, it can go even higher, although I don't really think that these are necessarily realistic targets. Some people don't even think that 1.272 is a realistic target, but because it broke inside a cloud, I think it's possible. You're going to have some resistance here around 82.5 as well, because that's where the Tenkan Kijun is at, but we'll deal with that later when it gets there. I just think that it's not a bad setup because of entrance of the cloud, and I'm going to basically just let it do its thing. Now, I do have another Ethereum Treasury play. This is BTCS. BTCS has been owning and accumulating Ethereum for a lot longer than BMNR. It has also a lot smaller market cap than BMNR, so it's more risky. With that said, it's been forming higher highs and higher lows ever since December 2022. Very clear parabolic bull trend on the way up. And it's just been breaking level after level after level. Right now, we're trying to break the 0.618 in the context of it being inside the Ichimoku cloud. Again, that increases the probability for it to hit some of the higher targets up above. 0.786 could be a resistance. Top of the cloud over here around 16.4. And also 0.86 over here, which was the previous high over here. Now, if it has enough momentum, make higher highs and higher lows in 2026, and if it breaks above both 0.76 and 0.86 and top of the Ichimoku cloud, then you go a lot higher, right? Again, I'm not saying that it goes to like $119, but the trend is your friend. I still feel comfortable buying. Right now it's stuck underneath some pretty strong resistance at 0.618 and the Ichimoku Tenkan Kijun, but still inside of cloud. I'm definitely down here on this position, but I feel patient, and I'm going to just kind of let it play out here and see how it goes. Now, if you are using a couple of changes here, if you use this peak over here and that trough over there, you can see is broken about the 0.786. It actually looks pretty good, right? And if you are looking at the more recent bottom over here and the top over here, you can see that it's been trying to challenge the 0.76, just having a little bit of a hard time doing it. Regardless, it's got the cloud as support. I feel comfortable getting into it, and we will see what happens. I'm not going to say that it's going to moon from here, because it can always drop back down to the weekly Ichimoku cloud to like $3. It's possible, right? Does it have to? No. Because does it even have the volume to support that drop down? No, it doesn't. Even with the last 3 weeks, I mean, this week's only been like 2 days. The last 2 weeks on declining volume, I don't feel that it has to come back down to the cloud like it did over here, but if it does, then so be it. I will keep accumulating, because as you've seen from my other stocks that I've done over the years, my top 10 positions, I'm not always in profit, right? So that's kind of what I'm seeing here at BTCS. Now, another way to look at BTCS is also the volume. You can see how each one of these increasing breakout here to form a higher high is on really decent volume. So there is some pretty decent technicals here that are in play here. I'm not going to spend too much time on the last one because I've talked about this a lot already. This is a stock that I keep buying, and I think right now it is, even though it is my number 2 position, Coinbase, ticker symbol COIN, I still find opportunity to buy, to potentially buy, and I still feel pretty good about the stock moving forward. I think that what happened here that got a lot of people very, very shaken out is a pretty traditional elite wave running flat, which basically makes, a double bottom over here, but it makes a higher high over here. I think this is what that is. Sometimes these running flats here, if you're into the whole elite wave theory where it goes, 5 waves, 1 small wave up, 2 small wave down, 3 big wave up, 4 small wave down, and then 5 is like the end of the bull trend, like the exhaustive move up, right? I think this is 1, and I think this whole elite wave running flat over here is 2, and I think we're getting ready for wave 3. I could be wrong. This is how I'm speculating it. This is where I'm putting my money into. And if the cycle's over, I'm going to lose a lot of money, guys. But this is kind of what I'm thinking. In terms of why I think it's still a good area to accumulate, I think it's still holding the rising 20-week moving average here pretty decently. If it breaks down, it could go down a lot lower, sure, but I think it's already gone through a lot of consolidation over here. It's more or less just keep falling cup and handle after cup and handle after cup and handle. It looks like it should be ready, but it's just not doing the Mooney thing yet, which actually doesn't mean that it's a bad stock. It just means that it needs to take its time. Holding the Tenkan over here, back testing the Tenkan over here beautifully, right? You're talking about some pretty decent volume over here, push above the Kijun and the Tenkan, and then back testing the Tenkan here on, not so high volume, finding support. This thing looks like it wants to take off, but it's just waiting for something. If you ask me what it's waiting for, I don't know. Maybe it's waiting for Bollinger expansion. But I think that if price is able to push back to the upper Bollinger Band, the lower Bollinger would also expand, and this thing could end up keep going up a lot higher. I think that this is still at a pretty decent spot right now because it's above the 0.86, and we've also just back tested 0.86 here last week, and it's holding. It's holding some higher fib levels. It's looking like it's just finished wave 2, and it's forming for the most part higher highs and higher lows. I like the setup for this. And then another thing I also want to show you, in addition to tabbing 0.86 last week, I can also show you the Gann chart here, and this is probably all I'm going to show. That, and also I can show you some potential targets this cycle. Let's do 360. This is a traditional 45 multiple, and I'm going to do 10, right? You can see if I just zoom in over here, it perfectly backtested the arc last week and held pretty well. So this whole Gann also has been giving some really beautiful market symmetry here, by the way. So as far as I'm concerned, Coinbase is a bullish stock. And as far as I'm concerned, if you're wondering about potential targets, and if the crypto market doesn't die, which again, I don't know anymore after last Friday, well, not last Friday, but Friday before that, if it ends up holding the 0.86, and if this is just the beginning, some higher targets like $800, $1,200, or even $2,100 is possible this cycle if Ethereum does really well moving forward. I really think that Coinbase is probably tied to Ethereum. I think Coinbase is waiting for Ethereum to done consolidating sideways before going up, and Ethereum is still consolidating sideways and not going up yet. So Coinbase is just consolidating sideways and keep back testing support levels and holding. I am bullish on Coinbase. Finally, I want to show you, this is how I've been doing with these 7 positions that I'm still buying over here. Coinbase I've been buying for closer to a year now. I've shown you I'm up about 40%. Initially I was up maybe a lot higher just like a week and a half ago, but that's okay. The rest of the position I just kind of started, like RSRX, I'm almost break even. I've been accumulating for a very long time. Rivian, I've been accumulating for about half a year. I'm kind of close to break even. I'm still down close to 10%. Arcade, I've accumulated for longer, probably about eight months or so. So I'm up about 40%. QBT, extremely speculative. I'm down 20%, guys. I only bought it, started buying it about 2 months ago. Not a heavy position, very risky, but I'm down 20%. I'm still seeing technicals on a higher time frame. I'm just going to slowly accumulate here. BMNR just started that, got 2 weeks ago, down about 8%. BDCS started a couple of months ago, down around 11%. Not the greatest, again, I'm showing you the kind of pain that I've gone through with the accumulation of my stock in the past. Sometimes you just have to go through the pain before the gain. And if I end up just going through the pain without gain, then so be it. That's investing, that's trading for you. Anyway, thank you so much for listening to this rather long video. I really wanted to go through quite a lot of things here and share my thoughts in my journey. I hope you enjoy this type of video. Let me know on the comments. Guys, take care. Have a good one. Bye.